Welcome to a new update, and today we're going to cover the price action of Bitcoin. We're going to make a small summary of what has been happening with FTX and the aftermath right now, and we're going to look at what is important in the coming weeks and what we can expect, because on macro side a lot has been happening, and also internal with crypto we've seen a ton taking place. As of course FTX has been collapsing and BlockFi has been having issues, and we've also seen a ton of misinformation, false rumors, hype-driven exposure, and engagement-driven content. That's what we're going to cover in today's update. But before we continue, make sure to hit the like button, subscribe to the YouTube channel. Also check out our free trade letter 3 times per week with the latest content for you to improve your trading and investments. And also check out the partnership we have with Bybit. We give away 1 month for free if you join Bybit through our affiliate link and deposit $100 there. You even are possible to join our premium membership for free for 1 month. If you deposit $1,000, you are going to get another $100 free on your account on Bybit as well. So check it out beneath. Also, when we're looking about the exchanges, the first topic is that are the exchanges actually safe to use? And I felt a bit strange to say anything about Bybit, etc. But I think that most of the exchanges are doing pretty much fine. And right now we have seen the aftermath of FTX, which was a Ponzi from the beginning. We've come to the conclusion that they are fraudulent and that they have been using it in a terrible way. That is destroying the entire market, but it has a lot to do with crypto and also almost nothing. In such a way that the fundamentals of Bitcoin and Ethereum have not been changing. The fundamentals of blockchain and the ecosystem have not been changing. Instead, it has actually been improving because an outlier has been taking place in the terms of FTX that has been collapsing, through which self-regulation kicks in and the system itself starts to solve the issues and become stronger. So in that theory, we have been seeing CZ tweeting about the Merkle tree proof of reserves. And I think that people are making it in a positive way, but people are saying, hey, we also need proof of liabilities. And I think that's not the point. The Merkle tree proof of reserves proves that the client funds are one-to-one on the exchange itself. So in that way, the exchange doesn't use the client's funds. If people are asking for proof of liabilities, you actually want to see a balance sheet and of the actual company. So then you want to see proof of assets and proof of liabilities, and then you get the question whether the company is actually doing a right way with the earnings, with the revenue, if it is a proper business. But if you talk about client reserves, the actual client reserves should never be as an asset on the balance sheet of the company itself. If you talk about a fund, for instance, if they have 100 million in client funds from them and they are trading with that, those 100 million are never on the balance as an asset. All right. So if they make 10 million with the fund within 1 year, and they can keep that 10 million. That 10 million goes towards the asset on the balance sheet, and in terms of that, they use it for whatever investment they want to do. But the client funds and Merkle tree proof of reserves, that's what you need to know if the client's funds are actually there. Then you also need to question whether the investment engine is something related to the company. And we should also be wondering whether it's needed to have such a heavy... It's good that everything is questioned, but a lot has been questioned in the past few days in a terrible, negative way, destructive instead of constructive. We've been getting Twitter spaces with a lot of fake information towards the markets, creating more hype, creating people that want to get more exposure through this terrible situation to make themselves better. So it's a little bit in between. I didn't like social media that much in the past few days, but in the end I think that what we have been witnessing with FTX is going to be constructive for the markets. It could take some time before we're going to actually have prices coming back towards it, but I think that from here the fundamentals will even be stronger for crypto as an ecosystem as a whole, because I think that regulation might be needed for the markets, but the markets themselves are able to create self-regulation, which is way faster than the regulation that comes from the government. In terms of investment purposes, we know that CME futures price is trading $300 below the spot price, which means that that is even crazier than what we have been witnessing in the Corona crash. And I'm going towards Twitter for this. In that way we can see, and you can see that I was trying to tweet something. Dylan Leclerc has been tweeting this earlier, in which he has been looking at this closely. It is the CME BTC futures minus spot BTC, which is a premium or discount, and then on the bottom you can see the Bitcoin USD price. So what is important here? The CME futures have never been trading so far below the price of spot Bitcoin. CME futures open interest is at all-time highs in BTC terms, which is 1.45 billion. That is a whole lot of fiat denominated short positions that will eventually get wrecked. And why is that? If you go towards those spikes, you can see that those spikes, especially this one, has been taking place in the Corona crash, which was even worse or even less worse than the crash that we've seen here. What we have also been seeing, and in this chart you can't see it, but in 2018 we had the exact same. If you go towards the volumes of the price action of Bitcoin, you can see that the daily candle of this crash on Coinbase and other exchanges have been the highest till date. So in 2021 we have not seen the spike as high as we have seen it here. We've only seen it as high in March 2020. So the capitulation, anger, depression definitely is on the cards right now. So where are we? Well, we have also been seeing that Katie Wood's ARK has been buying Bitcoin as the discounted 41% through Grayscale. So there is basically no interest into Bitcoin at this point, which automatically means that if you still see the fundamentals of Bitcoin being unchanged, that it is a time to start accumulating. And I'm not saying we're going to have a V shape here. I'm saying that if you want to start investing into crypto and into Bitcoin, these prices are definitely the ones to go forward with. And then also, FTX collapse has been taking place and Ether is still trading at $12,500. Bitcoin is only at 17k or 16.7, which is not too terrible at all at this point. What are we looking at right now when it comes to the price action of Bitcoin? We are definitely looking on how the coming days are going to progress from here. So I would recommend to take it slow when it comes to trading, especially as we have been dropping beneath the range low. So in that end, we are looking at 18 to 18.5k is the crucial resistance. If 18 to 18.5k breaks, there is a very likely chance that we're going to overshoot. As I just said, the amount of shorts is incredible on the CME futures. The amount of shorts overall has been incredible, and I think that the mass is definitely trading the short end right now, because the expectations are fueled by the hype-driven content that we're going to have another collapse and another sweep, which is technically very likely. In that case, you can be looking at 12k, 14k accumulate for your investment positions, but shorting at this point is tricky, especially since everyone wants to short at this point. So if we get towards the area of 18 to 18.5k, we might be starting to overshoot, as those shorts have to get forced closes, and that is only going to trigger more long entries. And then also we have Alameda, which is not selling on the markets anymore. What do we see even more? We do see that the DXY has been breaking down. So if we did not have the case of FTX collapsing at this point, we will definitely be trading way higher, especially since the Nasdaq has been showing a tremendous amount of strength. We have been making new highs here. We are still continuing to show strength. This video has been made before PPI comes out, so maybe we are collapsing after it anyway. But with the Dow Jones showing a ton of strength as well. So in that case, we can see that the markets of risk on are definitely the territory right now in which we are looking for continuation on the macroeconomic path there. Also, what we do see is the yields. These are also starting to fall, and they continue to fall most likely in the coming period, which is going to fuel the markets even more. So within crypto, we want to see peace, rest, calm, progressive growth in the terms of the Merkle trees, in terms of the insurance fund, in terms of making the markets pure again. When it comes to macroeconomics, you're looking for CPI that's dropping, you're looking for PPI that's dropping. But the conclusion is, stay calm. And if you want to invest into crypto, this is your chance. Yes, we are trading lower. Yes, I was wrong on the fact that we didn't hit the bottom. But we are still in that period right now. We're still accumulating. So I think it's still a good chance to go for it. So That's the update for today. Tomorrow I'll be back with a fresh new update. Make sure to hit that like button, subscribe beneath, and I'll see you again. Ciao!